I want to provide some insights into Chevron's acquisition of Hess and what a severance package could mean as a Hess employee. My name is Stephen Chambers, and I'm a wealth manager at Willis Johnson & Associates. So for some context, most folks are aware, Chevron has agreed to purchase Hess for a whopping $53 billion, which would be Chevron's largest acquisition deal ever. A big milestone in the deal came about on May 28th, where Hess's shareholders approved the vote to become acquired by Chevron. So what else do we know? There has been a brawl between Chevron and ExxonMobil that could actually sink the deal. Exxon claims that they have a contractual right to match Chevron's offer to purchase Hess's 30% stake in Guyana. If the argument prevails in arbitration, it could destroy the merger. And this standoff is projected to go all the way through Q1 of 2025. Keep in mind, this contract in which Exxon's talking about is a joint operating agreement, which was written decades ago, but are very common between two companies when they partner in these mega projects. So we'll see how that turns out. Separate from the clad is Chevron and Hess still has to go through regulatory approval to see if the merger gets approved. What we're reading, however, a lot of analysts don't really think there's going to be any problems with the regulation piece. Well, that brings us to why we're here today, and because there's plenty of uncertainty around the deal, and with uncertainty comes fear. And what I want to do today is provide some guidance on if there is a potential layoff, if there are potential layoffs and severance, what that could look like for you as a Hess employee. We'll also talk about some of the company benefits, what could happen there, and then we'll end it with some tax impacts. So we're going to be referencing what's happened in the past, historically, to give us an idea of what could happen in the future. So back in 2020, Chevron acquired Noble, and they released a bunch of information on the severance packages, what that looks like. And so we're going to use the Chevron Noble acquisition as a template to kind of guide us into what could happen with the pending Hess acquisition. If you look back in 2020, the price of crude was at about $40 a barrel, and the price of Chevron was at $70. Because of that backdrop, you can see here that Chevron laid off about 25% of Noble Energy employees, in addition to actually laying off 10 to 15% of its own employee base. Fast forward 4 years later, the price of crude is actually trading around $74 a barrel, and the price of Chevron is around $162. So the economics look more favorable, which could mean that instead of laying off 25%, it's less. So the severity could be less, but who knows? Chevron is controlling the acquisition. They've gone ahead and written some change of control parameters, which kind of dictate what the severance package would look like. They did this for Noble, and they're in talks of doing this right now with Hess. So if there's change of control, the main thing is they want Hess employees to get an idea of what their benefits would be if they get laid off. In addition, they're trying to retain certain Hess employees. So this should be published here shortly, stipulating the change of control agreement and what a qualifying termination looks like to determine if you qualify at the end of the day for a severance package. If you look at the severance package that was offered to Noble employees, this can give you an idea of what you can expect. For starters, there will be a cash severance payment. There will also be a cash payment for health and insurance benefits. And then lastly, your stock options, your equity awards as a Hess employee could receive some accelerated vesting. So let's talk about that in more detail. So this is the cash severance payment that Noble employees received. Big picture, to summarize this, you get a payout based off your base pay. You'll get a bonus payout, which is going to equal your cash payout. It may or may not look like it did for Noble, but give you a general idea of what type of cash payment you could receive. So for an example, right, if your annual base was 104, your target bonus was 52, you worked at Noble for 5 years, right? Your target base pay severance was around 42,000. The bonus was 26 for a total payout of about $67,000. This is straight from the Chevron Noble benefit book. Hess's may look different. And then again, with the health insurance, Chevron offered Noble kind of a payout based off their current health insurance coverage plus their life insurance coverage, which would equal kind of a one-time cash payout. So kind of if you're tracking so far, you potentially could get two payouts, one in the form of your base and bonus, and two in the form of your health insurance and life insurance premiums. So lastly, your equity awards, i.e. your stock options. During the Noble deal, any unvested awards from Noble were fully vested, which means you didn't have to stay during that entire performance period to receive the payout, which is a good thing. And the target performance modifier stayed the same. They didn't apply a higher or lower modifier to the vesting shares. And then lastly, the exercise period was extended, which gives you more flexibility in terms of when to exercise that. Right? So those are favorable conditions for if you have equity awards that may or may not be applied to Hess's situation. So to kind of summarize it, guys, there's uncertainty, and as soon as we learn more information, we'll release additional videos. But if there are layoffs, it's very reasonable to expect to receive a severance. Company benefits, your health insurance might be paid out in the form of a lump sum, and then tax implications. So we'll get into more details on the tax implications in another video. But big picture, guys, if you're severed, you get a cash payout, it's likely going to be a high income tax year for you. So if you can defer exercising stock options, if you could defer other income into a future or subsequent years and apply that income to a lower tax bracket, that would make sense. In addition to that, it could make sense to increase deductions this year where it makes sense, i.e. charitable giving, etc. So these are just some of the things we'll talk about in a future video. But the key takeaway is if you are severed this year, there could be some tax strategies to employ. If you enjoyed this content, subscribe to our YouTube channel to learn more.